Nigeria's foreign reserves shot up by US $540 million in just 2 weeks. But does that signal real stability or just a short-lived headline? The big picture, what's happening? According to recent data from the Central Bank of Nigeria, or CBN, Nigeria's gross external reserves climbed from approximately US $42.63 billion on October 13, 2025, to about US $43.17 billion by October 30, an increase of US $540.28 million within just 17 days. Importantly, this rise coincided with improvements in liquid reserves, the portion of reserves immediately available, which increased from roughly US $41.98 billion to US $42.55 billion, while blocked reserves, funds less immediately accessible, declined from $656.45 million to about $618.63 million. This surge represents around a 1.3% growth over 2 weeks and about a 1.8% increase month on month. Why this matters? A. Macro liquidity cushion. Higher external reserves give the CBN more buffer to defend the Naira, meet external obligations, and manage shocks, oil price dips, capital flight. B. Investor and market confidence. A growing reserves figure signals to foreign investors and rating agencies that Nigeria's external position is stabilizing. This can improve Nigeria's attractiveness for portfolio flows. C. Currency and import support. With more reserves, the risk of foreign exchange shortages reduces. For an import-dependent economy like Nigeria's, this is especially significant. D. Policy credibility. The increase may reflect early payoffs from reforms, liberalized FX market, stronger oil output, improved remittance flows. It strengthens the narrative that reforms are working. What's driving the increase? Several factors appear to have contributed to the recent jump. Portfolio inflows. Foreign investors may be bringing in dollars to buy Nigerian bonds or equities, contributing to FX inflows. Reduced outflows. Improved FX policy may reduce leakages, unauthorized dollar sales, smuggling, subsidy pressures. Oil and non-oil FX inflows. Higher oil export receipts, remittances, and non-oil export earnings help build reserves. Central bank operations. Better reserve management, reducing blocked funds, improving the liquidity of reserves, makes more of the stock usable. The drop in blocked funds is relevant. 5 key risks and questions to watch. A. Sustainability of the inflows. Is the rise driven by one-off inflows, example portfolio flows, that could reverse rapidly? B. Reserve adequacy versus obligations. Bolstering gross reserves is good, but one must consider reserves to import ratio, external debt service, and actual usable or net reserves. C. Currency and infusion link. Will the increase help stabilize the Naira broadly? For now, the parallel market spread remains wide, and the official rate may not fully reflect market realities. D. Reform depth versus optics. While figures are rising, Nigeria still faces structural vulnerabilities, heavy import dependence, oil market risks, inflation pressure, and public debt. 5. Transparent reporting. Will the CBN publish clear breakdowns, gross versus net reserves, liquid versus blocked funds? The declines in blocked funds are positive, but clarity helps build trust. What to watch for next? Updated reserves figures. Will the reserves continue to rise in November and beyond? Import coverage metrics. How many months of import cover do the reserves represent? FX market reaction. Will the Naira strengthen further, or will the parallel market still show weakness? Macro policy moves. Does the CBN leverage improved reserves to reduce interest rates, improve liquidity, or ease FX restrictions? Debt servicing. How will reserves be used for external debt interest and principal payments? Are they trending down? Transparency and governance. Will the CBN publish usable reserve metrics and explanation of the composition? The broader context. Over the past few years, Nigeria's reserves had faced pressure. FX shortages, large import bills, subsidy burdens, and currency instability. Gains like this suggest a turning point, or at least momentum toward one. For example, earlier in 2025, Nigeria's net reserves had reached multi-year highs as reforms began bearing fruit. Reuters. This recent increase could reinforce investor sentiment, support the exchange rate, and improve Nigeria's ability to manage external shocks. Final thoughts. The headline, US $540 million reserve rise in 2 weeks, is encouraging. It speaks to improved FX dynamics, possibly stronger policy foundations, and enhanced buffer capacity. However, size matters less than durability and usability. For Nigerian businesses, households, and the economy, the real benefit comes not simply from large numbers, but how it translates into a stronger currency, lower import costs, reduced inflationary pressures, and more stable economic footing. If these gains hold, Nigeria may be inching toward a more resilient external position. But if they reverse quickly or fail to tie into deeper reform, the surge may look more like a blip than a breakthrough. In the next few months, how the numbers change and how policy reacts will speak volumes.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.